Welcome back. Counting down to pre-open. We've taken the Nifty calls. Let's now take stock calls. Nitesh, let me start with you. What are you buying and selling?
Anuj, all buy calls today, no sell calls, given the fact that we had a very strong reversal. A lot of stocks could see continuation. I think HDFC Bank could lead the Bank Nifty again. Buy with a stop at 1513 here, targets of 1560. Marico is a buy with a stop at 526.5 for targets of 550. Power Grid is a buy. Keep a stop below 229.5. Look for targets of 241. And L&T Finance is a buy with a stop at 83.5 for targets of 87.5.
Okay, and Sudarshan, are you buying more than selling? What's the call?
Yeah, of course, I'm buying more. But before the stocks, let me tell you the Nifty levels at which I have to say that, okay, the bull market may not be what I think it is. And that's 17,770. That's yesterday's low. If the Nifty were to breach yesterday's low, then we'll reconsider the bullish view till then. So that's also a level that's important. And now, Indiabulls Housing Finance is a buy. The stock has been in a trading range. It's outperforming. It's a buy with a stop under 131. Kotak Bank is a buy. Another stock which has been in a trading range, and everything was, say, doing good yesterday. But here it's also outperforming. Buy with a stop under 1892. SBI Card is a buy with a stop under 938. Almost the same pattern. And Voltas is my only intraday short sell with a stop above 965.
Okay, thanks a lot for that. So just one intraday short sell. But to be fair, Voltas has really been under pressure. I think it's seen a 25% fall in the last 12 months and has underperformed the market quite a bit. Okay, look at that chart there. But let's do one thing. Let us get Ashish Chaturmota. He's the Director Head Research at JM Financial Services. He joins us now. Ashish, good morning and thanks for joining in. India has been so resilient compared to global peers. You think that would continue? And what are the stocks that you're looking at today?
Hi, good morning, Sonia. So yes, I think the momentum looks like it is going to continue, and this is going to led by banking space. So just to give you a data point, Bank Nifty consolidated for good 10 to 11 months, and from the October 2021 highs, which was around 42,000, we went down to almost 32,000, and now it's a complete V-shaped recovery which we are witnessing. So looking into it, we think that Bank Nifty is poised for a move towards 44,000 kind of trajectory in coming few weeks. And keeping that in mind, I think the entire banking basket looks quite promising. Within that, I think two stocks which we are recommending today. One from the PSU banking basket, which is going to be State Bank of India. There we are witnessing huge OI buildup in the last couple of weeks, and technically the stock, after consolidating for good 9 months, has given a fresh breakout. So this is a buy at current levels also, and on dips one can try to accumulate around 565, 560 trajectory. Keep 555 as a trading stop loss. On upside 610 would be my short-term targets in State Bank of India. From the private banking basket, it's going to be Axis Bank, which has been consolidating for good 6 months, and now a fresh breakout above 800 levels has happened in the last 2 trading sessions. So here one can initiate a long, keep 785 as a trading stop loss. Our shorter term target is 850, but positionally we believe stock is poised for a move towards 900, 920 trajectory. We are quite positive on the entire QSR theme. So within FNO space, I think Jubilant Food is one basket, which one stock which has been consolidating for last 6 months in a range between 630 to kind of 550 kind of trajectory. Now there is a fresh breakout which has happened in yesterday's trading session above 630 mark, and stock closed around 635. So I think this is going to continue its upward journey, keeping 615 as a stop loss. I think stock is poised for 685 to 700 kind of zone in next couple of trading sessions. And last but not the least is the auto basket, where I think Maruti is one stock which is showing very strong accumulation of long positions, although into consolidation phase, but looks like stock is getting ready for a fresh breakout. Keep 8900 as a trading stop loss. On upside, 9200 would be my short-term target in Maruti as well.
All right, Ashish, thank you very much. Great speaking with you, and good to have you on the program. Let's shift focus to the cement space. I mean, stocks were all a buzz yesterday, between 5 and 10%, depending on what you looked at. ACC, Ambuja, India Cements, etc. Jefferies has put the spotlight on the cement space in its recent note. Nigel is here to detail that out for us. Nigel, hi, morning.
Morning. Well, Jefferies has come out with some interesting points. They believe that the cement industry on the whole is moving from a desperate seller market to aggressive buyer market. And so they say that there could possibly be various mergers and acquisitions that could take place as companies look to scale up from here. Smaller companies, they have two choices. Either, in fact, they fight with the leading players, or they sell out and they make their money and, in fact, move out of the system itself. Now, they believe that there is a wave of consolidation which could be possible because the current large names, that's the industry leaders, they look to garner their market share, while you have a new entrant. That's the Adani Group that's come in there, and they are creating all the buzz in the space as of now. Remember, in the last few years, Ultratech Cement, that used to be the sole big bidder out there. Suddenly, you have a whole host of new entrants that have come in there, namely the JSW Group as well as the Adani Group. Coupled with them, you have the others, Dalmia as well as Shree Cement, as well as Ultratech that are in there. So suddenly, you have these 5 big players who, a number should come up for you on the screen with their current capacity and where they look to head. Shree, remember, in the past, they've been rather conservative with regard to M&A, but they as well have been making positive sounds now with regard to maybe possible acquisitions in various parts of the country. So it makes things far more interesting. In terms of Jeffrey, when and where and what's the quantum they're going with? Well, they believe that close to around 50 million tons of capacity can change hands in the next 2 to around 3 years or so. So that's what Jeffries has to say. Let's stay tuned whether or not the current excitement will lead to some kind of deals, or in fact, it'll just fall by the wayside. Back to you.
Okay, coming back into the spotlight after a really long time, that's the cement space. But the stocks have been clocking in some solid gains. Nirmal Bang has written a report on the sector. They are turning positive on the space again. This is because they believe incremental demand will outpace supply over the next 3 years, and also because they see cost pressures receding. To discuss this, we have Mangesh Bharang, the research analyst at Nirmal Bang Institutional Equities. Mangesh, good morning and thanks for joining in. Due to paucity of time, just wanted to quickly run through your views on the cement space. Real estate is also picking up in a big way, which means, more demand for cement. Tell us, what are your top picks in this sector and what kind of volume growth do you foresee?
So for the industry, I think for the next 2 to 3 years, we can expect at least 8% demand CAGR, which is one of the highest that we have seen in the past few years. And because this is a pre-election year, it's a FY24 put positive surprisingly. That's what we expect. In terms of top picks, we like Ultratech in the large cap space. And in the mid cap space, we like Birla Corp, JK Lakshmi and Nivoco. And then we like Sagar in the small cap space.
Mangesh, as Jeffries highlights, an aggressive wave of M&A is possible. Do you agree with that? And to your mind, which are the companies which could be in the mix?
So historically, in the cement industry, there have been a lot of talks of consolidation over the past many years, but we have not seen it happen meaningfully. But I think a few hands could change in this process, wherein wherever there are succession issues, or wherever the existing management has not been able to run the operations profitably or sustainably. I think those are the ones, but I think there are only 3 or 4 names that come to mind. Obviously, I'll not be able to take the names because of we don't know anything about it yet. But I don't see a large scale consolidation happening in the industry for sure. We would still have regional as well as smaller players operating in each region, in my view.
Okay, so you said you're upgrading the cement demand growth forecast. Earlier, you were looking at 6.5%, and now you're 7.9%. So which are the biggest beneficiaries of this?
So we have actually turned quite positive, and in fact, even the channel checks are suggesting that East, along with Central, could be the regions which would grow the highest for the next 2 years. So we have seen Eastern region, demand faltering over the past couple of years because of multiple temporary reasons, be it weather related, be it sand mining related, or be it transport or logistic related. And also obviously there were COVID related shocks as well. But over the next 2 years, I think these 2 regions can grow in double digits, and that is what is driving this growth higher. And with the beneficiary, I think we are looking at some of the East-based players like Nivoco, and then to a certain extent JK Lakshmi and Birla Corp to ride this growth.
Okay. How do you approach ACC and Ambuja from here? You believe that Ambuja has run ahead of itself, and is that why you have a sell rating on the stock? You prefer ACC over Ambuja?
It's a difficult question, to be honest, answering on ACC and Ambuja at the moment. But I'll try to do my best. So the way I look at both these stocks is, I think Dani Group has a lot to do. They would be merging these two companies together, and then they would lay out the plan in terms of what they want to do in terms of capacities or efficiencies in future. So there is still a bit of lack of clarity in the market right now. And I think one can assume certain things in terms of what they can do and what they have done in the past with the other sectors that they have entered. And that's what extrapolation is happening in the market right now. So I would still wait for some clarity on it. I think this Friday there is a board meeting, and post which we would be able to take a really good call on it.
All right, Mangesh, we'll leave it there today. Thanks a lot for joining us. The pre-open has settled 42 points higher on the Nifty and about 128 higher on the Nifty Bank. NTPC and Shree Cement are the top two gainers, and Hindalco is the top loser on the index. Mitesh and Sudarshan still with us for 9-10 calls. Sudarshan, do you buy the index here or wait for a dip and the 9-10 call?
No, I buy the index. That 5-minute waiting period is something different, but I buy the index in the morning. And for today's trade, the initial stop should be 17,950. SBI card is a buy with a stop under 938.
Okay, SBI card is a buy. In the pre-open, South Indian Bank, it's no longer tracked as much as it used to be, but that's doing quite well. And Vedanta, once again, up 3.7% after yesterday's monster move. Is another stock looking good. Mitesh, what's your 9-10 call?
Yeah, I would go with a buy on Marico with a stop at 526.5 for targets of 550.
Okay, gentlemen, thanks for that. Let's now go across to Sonia. She's watching out for Maruti. Sonia?
So, there's a report, Anuj, BofA Securities, Bank of America Securities has raised the target price on Maruti to 10,500. They had a target price of 9,500 earlier. Now, they say that Maruti is all set to make a solid comeback. They have very promising new launches, and they're seeing a very good response for the new Brezza despite the premium pricing. So that's something that's very encouraging. They also talk about how Maruti is now plugging the gap that they had in the mid and the SUV, mid and the premium SUV segment. There was a big gap there, and now they're looking to plug that. So there is a volume growth of 14% that BofA Securities is predicting over FY22 to 25, and they have revised their revenue growth higher as well by 6 to 8%, and their EPS higher by 9 to 10% for the same period, FY22 to 25. So they're betting on Maruti coming back in a big way in this SUV space.
Sonia, thanks very much for that. Maruti in Focus. Abhishek is here with management meet takeaways from Kotak Bank and ICICI Bank. Abhishek.
Well, there have been investor conferences wherein, Kotak Bank in investor conferences guiding for growth outlook remaining strong, margins to remain elevated in the near term for the bank, and deposit growth acceleration is a key focus that Kotak Bank is focusing on. So CLSA has an outperformance rating with a target price of 2,100 per share, while Morgan Stanley has an overweight rating with a target price of 2,215 per share. ICICI Bank has also mentioned on the growth front wherein they see strong opportunities to gain to increase their market share in the loan mix. They expect core ROE or return on equity of 17% with a consistent 17 to 18% growth in their core pre-operating profits between FY23 to 25. So net interest margin is likely to improve in FY23 when compared to FY22 numbers. CLSA has a buy rating. They have increased the target price to 1,150 per share from 1,040 earlier, while Morgan Stanley has an overweight rating with a target price of 1,225. Back to you.
Okay, well, thanks a lot for that, Abhishek. Mitesh, ICICI Bank, of course, has been the one of the best outperforming stocks, but Kotak has been sort of underperforming. Your view on both these names?
So look, ICICI Bank, I think, has met the targets which we're looking at around 900 when the stock broke out from a triangle consolidation around 765 odd levels. Though I think the trend still suggests that the directional bias remains on the upside. So 955, 960 could be the next area. Kotak, in fact, you're right, it's underperformed, but it's also on the verge of a significant breakout. If you look at the last few months of charts, in January, then back in May, I think we have had weekly closing around 1950, 1960. If we get a weekly closing above that this time, then I think there'll be a breakout and the stock could possibly attempt 2150.
Yeah, this is the level where the Kotak stock has, in the past, made a bit of a peak. So it'll be interesting to see if this time it can take it out. And with the kind of momentum we have in Bank Nifty, perhaps that could be the best time to do it. For now, the market opening is here. The Nifty is opening about 42 points higher, 50 points now. 18,050 is what we have. The Bank Nifty continues its momentum, 150 points higher on the Bank Nifty at 41,567. The Nifty is in fact now up another 65 points in all. 18,067 is what you have. Quickly, let me go through the winners and losers. Let's start with losers first because it's a very small list. Hindalco is down 1.8%. I think Alcoa overnight was down on their very negative commentary. So how much of that will have an impact on India, we don't know. But Hindalco is starting down, and a couple of these IT names are continuing their downtick like Infosys. But X of that, it's really all about the gainers. Kotak Mahindra Bank is your top gainer, up 1.5% on that. Shree Cement is doing well as well. Maruti Suzuki and Adani Ports are the other stocks with 1% gains. Then you have Mahindra, BPCL, Bajaj Finserv, Nestle, SBI Life and Bharti Airtel that are doing well. HDFC as well is higher. ICICI Bank, HDFC Bank, Coal India are some of the other prominent gainers. The Nifty is now up 81 points. 18,080 is what you have. A bit of a short squeeze, this one looks like. Hero MotoCorp is down 1% now, by the way. And Hindalco and Tata Steel are the other prominent losers. But really, all guns blazing as of now. Sonia, what about broader market?
Okay, all guns blazing is correct. Just look at the way the broader market is moving. 8:1 now in favor of the advances. The mid-cap index is up almost 0.7%. It's big, the moves that we're seeing. Banks are the ones that are charging ahead. Bank of Maharashtra is up 3.5%. Karur Vysya Bank is up 3%. IDFC First Bank is moving in the green. Union Bank, that whole lot. There's a trading pop here. Federal Bank, Bandhan Bank, IDBI Bank, all of them. Yes Bank as well is up about 1%. PNB is up almost about 1%. So honestly, when Yes Bank starts to move with high volumes, then you got to just put a bit of caution on the table. Apart from that, you have Vedanta that's rallying quite a bit, so 4.5% higher on that. In fact, a lot of these, the metal names are doing well this morning. Defense as a theme continues to charge ahead. BEL is up almost about 0.6%, and a lot of stocks hitting fresh 52-week highs as we speak, specifically in the banking space. So Karur Vysya Bank is at a fresh 52-week high. NTPC fresh 52-week high this morning. SBI, ICICI Bank, of course. All Cargo Logistics is sitting at a fresh high. Mahindra Holidays, DCB Bank. You have something like a Siemens at a fresh high this morning. And a couple of these others in the sugar space also picking up a little bit of pace. So very good broader market trajectory. Not too many losers. Nalco, PVR, Coffee Day, BHEL, just, a tad bit in the red, about 0.5% or so. PVR, there's 9% equity that has changed hands. So there's that deal that has taken place. That's why the stock is down about 2.5% right now. But other than that, it's a very, very good market.
Oh, yeah, absolutely. There's GR Infra as well, which Vivek highlighted. Where there's a OFS. It's down about 4%, I think. That is GR Infra, which is coming up. IndusInd is starting about 0.75% lower, but IndusInd, of course, was up 5%. It's up 20% from the first quarter results level. So that's that. Just a bunch of names, broader markets on the upside. Tata Investment, I mean, it's absolutely gone berserk. Tata Investment is a Tata Group company which basically is like a fund. It's like a long-term, long-only fund. Owns a portfolio of high-quality names across the board. Not exclusively Tata Group stocks or anything, but like a regular fund. And the value of the businesses, the value of the companies it owns, 2764. I mean, it was up, I think, 10% plus yesterday as well. South Indian Bank, I think we highlighted 20%. South Indian Bank. IDFC First Bank is up about 3% or so. It's coming up with volumes. Karur Vysya we highlighted. Karur Vysya is up 6.5%, 88, 89. What else? I mean, there is a lot of other names. Lesser talked about. KPI Green is up 4%. I think we highlighted this yesterday. The stock's at about, 910 or so. Aether is up about 3%. Data Patterns is starting about 4% higher. TRF, which is a material handling company, Tata Group company, that is up 10%, locked up. But again, volumes are a little low on that one at this stage. So volumes need to pick up. Otherwise, nothing to complain. Things are settling down with about 5:1 in terms of advances to decline ratio at this stage. 18,085. So it's a smooth start. 80 points on the Nifty. No problems at all for this Thursday morning. Our market master of the day is with us. Andrew Holland is Chief Executive Officer at Avendus Alternate Strategies. He's joining us to take some questions. Andrew, great to have you with us here. Thank you very much. I mean, it's just an incredibly strong momentum market that we have on our hands. What do you make of it? The recent last 5-6%, which has come quickly in about 10 days flat.
Yeah, it has, and it's I think caught us all, kind of positively surprised, shall we say, because obviously a lot of global factors have not really worked in the market's favour, but it's just overcome them. And as you said, the momentum is very strong, and it's hard to fight it. I've been reflecting on some of the reasons why we've been seeing this, and one of the things that we talked about before, Prashant, was this kind of whole deflation trade going into next year as the global economy slows, and perhaps investors have taken that in terms of that inflation is peaking at some point over the next quarter, and if that happens, I'm not saying that the Fed's going on pause or is going to do anything in the next few meetings. But obviously the expectation is that at some point in the next quarter or so they will. And when you look for growth, India stands out. And I think that's played out a lot earlier than we were expecting. I still think, though, Prashant, there's still a few hurdles to get through. We do have the Fed meeting next week. We do see that the balance sheet's going to be reduced by another $40-odd billion a month to 95. And any unintended consequence of that, I still think the market's kind of a little bit kind of complacent about. So, September, October, or back end of September, October are also kind of key months to watch. But of course, we've got our festive season coming, so maybe that momentum for our market continues for the time being.
Okay, the momentum is continuing in the Nifty Bank, by the way. It's a fresh all-time high that we have, sort of hit on that index, and almost there. Of course, been a very strong market, very strong index. ICICI Bank has been leading it. Andrew, good morning. This is this move in the Bank Nifty and the kind of leadership it's provided, especially names like ICICI Bank and State Bank of India. What's your view here?
So again, Anuj, something we talked about. If you're looking at that kind of peaking of inflation and possibly kind of talk on deflation, then the trade there has always been autos and the banking sector in particular, and that's really what's been playing out. I mean, I think we've seen bond yields fall a little bit here as well on that basis that commodity prices have eased over the last few months as well. So that's played out quite well, and of course for the auto sector. Lower commodity prices and the supply chain starting to ease as well gives the momentum for the auto stocks, and so those have really played out quite well.
Nifty Bank at a record high, 0.8% right now as we speak. And that's a 12-month chart where the Nifty Bank has given 14% returns. But just pull up a 3 or 4 month chart and you'll see the kind of ferocity with which the Nifty Bank has moved in the last 3 months. Now conquer that 41,700 mark. SBI has a big role to play. By the way, SBI yesterday hit a market cap of 5 lakh crores for the first time ever. And it's been hitting record highs as well. A lot of the heavy lifting, Andrew, has been done by, these banks, SBI, ICICI Bank. So the leaders have really packed in a punch this time around. Just wanted your thoughts on how to approach it from here on. Of course, everyone knows it's a buy, but is this getting to be a bit of a crowded trade right now? Or do you see this as a start of some sort of secular uptrend in the banking space?
So again, it goes back to your kind of, trying to look beyond the kind of the headwinds in terms of interest rates globally and when that will kind of come to an end. So the market and investors are saying that, they can see through this. So, the banking sector will be, one of the clear beneficiaries of our economic growth, and it's time to be buying. So I think the momentum will keep it going. And we've said before that, the leadership in the banks has changed. quite considerably over the past few years because of the different management changes that we've seen. So the pecking order is different than it has been in the past. And I think the themes that we talked about previously, which is obviously that deflation, trade, autos and banks, and the kind of reopening of the economy, so the kind of hotels, leisure sector have played out well. And I think the final theme is a capex theme, not just for India, but globally, whereas governments and companies will look to try and address that supply gap or supply constraints that they've faced over the past few years a lot more aggressively. And if governments don't help, then companies will. And that's why we're seeing, the foreign direct investment in semiconductor industry in India. And I expect more and more of this to happen. So that I think again is a great long-term story, but it's not going to be the usual roads, bridges, and normal government capex. It's going to be more specialised, and I think that lends itself to different companies within the capex industry. So the likes of ABB, Siemens, for example, are probably more geared to this kind of either smart factory, smart office going forward than the traditional companies we look to when we think about capex.
But there are so many, right? I mean, these are smaller names. I'm looking at look at something like HBL Power, a small name, 4% higher. It's coming up with volumes. We had the management of KEC International. They said that they've got the first sort of order from railways for anti-collision, devices. So that came in yesterday. So this entire capex is, of course, but you got to look then, unless and until, of course, you're looking at just the bigger ones, which is, as you said, Andrew, ABB, Siemens, etc. Just one more, Max Health is coming up. It was not there in the morning when we started. It's up 4%, coming up with decent volumes. Fortis was up some 6% yesterday. Max did not participate, but it is today. And of course, IDFC, South Indian, and Karur Vysya banks are top of the list. Balaji Amines is another one, which is up 4%, 3,800 plus now on Balaji Amines. Andrew, any other kind of newer themes or where you still find value at current levels? Could be subsectors within capex, building materials, anything you like?
Yeah, finding value is a little more difficult than it was a few months back.
It's easier. Value is harder, but that's always the case, right?
Yeah, but I think one of the themes I'm looking at a little bit closely is where China is being kind of I'm not saying excluded, but maybe will not be as a bigger force within India. And I think electronics is something which could be a new theme going forward as manufacturing here locally starts to take over from having bought everything in from China. So I think it's a new area. Mobile phone making could be something to think about, for example. So I think this is a new trend which I think we'll hear more noise about over the next not next few months, but over the next 6 months and more. So this is a new sector which I think could benefit from the kind of exclusion of some of China's companies from either importing or manufacturing in India.
Okay, but Andrew, the big debate is on the IT stocks now. There was a bit of a rally in hope that maybe the stocks are bottomed out, and there was some kind of hope for buyback as well from Infosys. But as a portfolio manager, how would you approach the large cap IT names now?
Anuj, I think you remember we've always been more negative on the IT. Well, when we say more negative, we just know it's going to be a hostage to what happens to tech stocks in the US because the correlation at the moment is still very high. So if you believe that interest rates are going to continue to rise in the US, it's going to have an impact on these companies, the tech companies, and the kind of multiples they have, and the sentiment will just keep reflecting in our IT companies who have benefited from the upside as well. Don't forget. So I think it's not a space I need to be. If I'm going to hide, I'm going to hide in FMCG and FMCG and telecom. Actually, if I want to hide anywhere, I don't think IT is the place to hide at the moment.
I don't think this is a market where you need to hide, right? I mean, anything and everything is rallying, so you can just go out there and be bold. I mean, at least that's the way it seems. But I wanted to take this theme forward because we're leading into the next discussion. This whole home improvement, real estate theme, right? Not just consumer durables, not just real estate company, but paint, cements. This whole lot is coming back in a big way. And we're leading into a discussion that we're going to have with a big paint player now in a bit. But wanted your thoughts. Any of these pockets that you like where investors should perhaps put in fresh money to work?
Yeah, again, I mean, paints, if you take paints, for example, obviously are going to benefit from low commodity prices. So that's the first part to it. But, you know, we've been saying, I don't know how long now, years now, that the affordable housing market has that kind of gained momentum. The whole move upwards in the chain, and then aspirational India will kick in, and that's what you're starting to see. And it's something I've witnessed, in the Thatcher days in the UK of people wanting, to make their houses or whatever they have a lot better, and that aspirational aspect comes into it more and more. So this is a trend that's not going away. You're going to have times when it's overvalued, which we've seen, and some companies do better than others, but it's a theme that's just not going to go away for India. I mean, that's for sure. And we know that, given our population, consumption is going to be the big driver for India going forward for many, many years.
Okay, so what we're going to do is we're going to thank you on that note and take that discussion forward with the paint company in a bit. Andrew, as always, pleasure speaking with you. Thanks for your thoughts. The market, it's coming off a little bit from the highs as far as the frontliners are concerned, but don't be fooled. Beneath the surface, there is so much activity. Just take a look at some of these stocks. Poly Medicure, for example, it was a stock that, was a favorite of the market for a couple of years. Then it petered off a little bit, now come back into action, up 6.5%. Balaji Amines, same case over there. Specialty chemicals have come back, and how? So Balaji Amines is up almost about 3% IRCTC is coming back as travel picks up, so that stock is up about 2.5%. And then you have your usual favorites, the defense space, where you have the likes of BEL, Bharat Dynamics, etc., that are still doing well in this market. But as promised, we were discussing with Andrew about how this whole home improvement theme is picking up in a big way, whether it is real estate, consumer durables, cement, now even paints is looking pretty good. So Berger Paints is the next corporate on our radar. The stock, if you look at it, has seen a 15% slip this year and is down 23% from its 52-week high. Now, that could also be because of the increasing competition in this space and crude prices. There were demand-related issues, but now some of those issues have ironed out, so crude has fallen. Let's get a sense of how demand is looking and what it could mean for the FY23 performance. Abhijit Roy, who's the MD and CEO of the company, is joining us. Abhijit, thanks a lot for joining us on the show. Things have finally come back. Demand is picking up. So tell us, how has the festive season been so far? And how are you combating competition, which I think is, the big issue that's plaguing the paint industry currently?
So the first question, July was a very good month. Then August, a little bit downwards. We had a growth, but not as robust as in July. September looks very good. So overall, the growth rate should be strong growth rate as far as Q2 is concerned. So in terms of demand, therefore, it seems to be fairly good. Given the current situation, I think amongst the consumer space, in the industry, I think we should be doing, the paint as a category should be doing quite well.
And on competition, you were telling us about how it is so far, and just trying to understand that given that so many players are entering the market, will you be going heavy on branding, and would that mean additional costs for you?
So, as far as competition is concerned, Sonia, everyone has entered except one, which is, probably will be entering around 2024. So all others are there already, so we haven't had any, serious threat so far, in terms of we continue to do whatever we were doing. And I don't think, we need to be overly worried. Of course, we are taking our own steps, in terms of whatever we can do to protect ourselves when the new entrant enters. But we are not really, very worried about it. There is enough space, I think, in the paint industry for one to come in. It's only one. There's no plethora of competitors which are there, and therefore, not a big worry for us.
And Grasim, right, will launch.
Yes,
that's
that's the only one which is pending. Everything else is there in the system already. And therefore, nothing much is going to change, by the entry.
Will promotion, advertising, etc. I mean, you've tied up with stars like Akshay Kumar, Kareena Kapoor. I mean, will advertising spends see a big step up?
So this year itself, we will be stepping it up a little bit, from what it was earlier. We want to build up our brand in any case, because our positioning, in the luxury segment needs to be improved a little bit. So that we will do irrespective of, whether someone enters or not. So that's a spend which we will do, and probably will accelerate that, probably next going forward.
What is the cost for getting these two on board? Could you tell us?
So it's not. It's quite reasonable, I would say. I would frame it that way. That it's a 3-year contract, and so per year basis, it's perfectly fine.
All right. Just a quick thing. What else can you do? I mean, the general sense is that both you and Asian Paints are gaining share at the expense of the number 3, number 4 players in the industry. But for you to close the gap with the number 1 player, I mean, what else can you do? I mean, what is the differentiator going to be for Berger?
So there are, 3 things, on which we are working. One, of course, is the distribution reach itself, which, in our case was a bit limited compared to the number 1 player. So that needs to be improved upon, and we are experimenting and have been successful in certain other ways of distributing material, and that's something which we are looking at. In terms of products, we are launching a few innovative products. Just now we have introduced in the construction chemical space 2 very interesting products which are to be used, called Dam Stop Duo and Dam Stop Advanced, which is to be used, before painting. So now after the monsoon, there's a lot of this dampness and leakages which you see on the walls. And when you try to paint, you try to resolve that issue first and then go for painting. So these are very interesting, unique products. One of them is absolutely unique. No one has that. It's a combination of preventing dampness along with the primer being one single product. So, that way the consumer also saves some money and at the same time gets his dampness, addressed. So those are type of innovative products which we will keep launching. We have Easy Clean, we have Anti-Dust, which are leaders in their own space. And then these are the type of, express painting service is being accelerated further. We are seeing good traction there in the urban markets. So these are things which will take us forward, help us close the gap some extent with the leader as well.
Okay, I think this is a product that's going to do very well. Talking from personal experience in Bombay, it's really an issue. I mean, every year during the monsoons, So if you're kind of painting your home and addressing dampness, then nothing like it. All the best with that. Just a couple of more questions on demand. You had earlier guided for a double-digit volume growth for FY23. Do you stick to that target?
Yes, we will possibly be very close to that, So more or less, we can say that double-digit volume growth should be through.
Okay, so double-digit volume growth should be through. Have you seen any recovery in industrial demand? Auto demand, of course, has picked up. I mean, you can just see it with the number of new launches. So can you break it up for us? What kind of growth are you seeing in both segments?
Yeah, so industrial demand actually is quite strong, because of on a low base, it's coming up that way, So auto actually, if you look at it 2 years back, what it was, last year it had declined, the year before also it had declined. So now it's reviving. So some amount of growth there. The protective coatings in which we are the leader is also seeing strong growth rate. The general industry is a little bit impacted, but that also is growing, but not at the pace at which protective is growing, or for that matter, automotive is slightly slower than the protective. So overall, the industrial growth rate is quite robust as of now.
Right. Just to, close the loop on the numbers that Sonia picked up on. For this year, revenues would be over 10,000 crores, Mr. Roy?
Yes, for sure.
For sure. But would margins, when will margins come back to pre-COVID levels, in your opinion?
I think third quarter and fourth quarter margins should be good. If nothing else happens in the raw material side, you never know, the volatility. Yesterday also the oil prices moved up a little bit, so we can't comment there. But I see, if everything remains as is currently, then we see a revival in the margin in the third and the fourth quarter.
Can we expect 17%, over 17% for the?
It depends on, as I said, factors, but we should be much better off than what we are currently because of, the price impact. We have taken the price increases and the raw material prices have cooled a little bit, but the impact of that cooling of the raw material prices will be felt in the third and the fourth quarter. That's why I'm saying that there will be an increase in the margin for sure in the third and the fourth quarter. How much it will again be dependent. Third quarter, we will surely have a margin expansion. Fourth quarter, again, we will have to see, how the raw material prices move.
Okay. Just one final question. The stock is down about 20-25% in the last many months. And I'm sure you understand that there are concerns, not just with one, two, but there are several new large conglomerates entering into the paint sector. So it's definitely going to be challenging. What makes you so confident of protecting your turf, protecting your market share? And do you think it's going to be a tough next couple of years?
So again, as I said, we do our job. There are three things which are, as I said, there's Grasim which is entering, in 2022. JSW has already entered. I don't see any other major player having announced, entry into the paint segment in a big way, right? So these are the companies which are there. Rest are all there, including JSW is already competing with us and there in the market, and we have continued to grow. Now, with the new entrant which is coming in, we are taking all our own steps in order to strengthen ourselves, as I said. And in the paint industry per se, where the growth rate is there is provision for possibly one more player to do reasonably okay. So I don't see us being impacted seriously, going forward. We continue to do what we know, and this is an industry which we know well. We know our consumers well, we know our dealers well, we know our painters well. We will strengthen ourselves on this front. I'm not overly worried. We haven't seen, even if you look at the India situation, there are many markets where we are very strong, where even the existing leader has not been able to penetrate, right? Same is true for us. We have not been able to break into many of their markets. So it is a slow and steady process. It's not something which happens. And it's not only true for India; it's true for all over the world. In nearby Bangladesh, we are the leader. They've been leaders for the last 20-25 years. So it's as if things change. It's not that you pump in some money and you will see an excellent result. We also have the money power to spend, if required. But that's not something which will give the result.
Instantly. It's a whole ecosystem.
It's not instantaneous. There are key elements: dealer, painter, consumer, all have to be aligned together.
And maybe the interior decorator as well.
Interior decorator at times.
All right.
So to get all of them aligned on one brand is a difficult task.
Got it. Mr. Roy, but good luck with that. You're doing a great job. Thank you very much for joining us with that perspective. Appreciate it, as always. Well, 25 points now on the Nifty. 18,026 is where we are at. We're off the day's high. For now, we'll take a quick break here. Up next, we've got an interesting company joining us from the logistics space, which has also been absolutely doing very well. We have Ravi Jhakar of All Cargo Logistics, who will join in to talk about the much-awaited national logistics policy, which will be unveiled later this Friday. Stay tuned.